Hey, good morning, everybody. Just the other day, I did a video where I was dealing with one of the dynamics we're getting right now, which is buyers uh, really not understanding the shortage of deals that will qualify for SBA. And I wanted to drill some more into that. So, what you're looking at right now is our Business Brokers of Florida internal system. I'm not going to show you everything, but it's one of a kind. A lot of people put it down, but if it was so easy to do, you would think other states would do it and other trade associations would do it, but they do not. Florida is the only market where brokers cooperate. But I'm going to give you a quick orientation on the system and kind of follow on to my meeting the other day. So when you're looking at this, we can look at all the listings in a market. We can look at it quickly by punching in a listing number. I can save searches. I can do it across the country on the odd chance that a broker in Florida has a listing. I can look at local area, which is my area with Lakeland all the way to Clearwater down south to Sarasota. You can search and filter it by county. You can filter it by business category. We can punch in SIC codes. We can set parameters on listing prices and cash flows and discretionary earnings. And you'll recall from the last meeting where I was talking about discretionary earnings, um, we function off discretionary earnings here. We do not function off of EBITDA because primarily the business brokers in Florida are dealing with Main Street. And when you value a business, you value it on who the most probable buyer is. And the most probable buyer is not an absentee owner. If you as a buyer are going to be an absentee owner, you're going to be competing against that person who is not. The value of that business is more to them than it is to you. Think of Shark Tank when they ask an owner of a business what his profit is. More often than not, he's including his salary. Those guys are looking at it as passive, so they judge on EBITDA. The inverse happens here. You're looking at businesses where you're competing against the owner operator buyer and you're going to pay more. It doesn't matter, what you want. It matters what the market bears. And that euphemism you've heard before is real. There is a marketplace. It exists. What has happened of late is a lot of private equity groups and people who have lost jobs who work in corporate America. They have EBITDA stuck in their head. They want to apply the hammer to what's requiring a screwdriver or bring those models from upstream downstream. And it creates a lot of frustration for everybody because that's not how it's done. This is the ecosystem. This is the market. This is the benchmark. This is how it works. Do you want to do M&A deals? Then do M&A deals. Then you're going to have to be able to pay for quality of earnings and deal with all the dynamics that go with a true M&A deal. So back to the MLS, we can filter by tax returns, P&Ls. So one thing to keep in mind, when buyers inquire of me, I always respond with an email directing them to either my website, which back ends into this, or to the MLS itself. They're coming a lot of times from Biz Buy Sell and ancillary websites, and you cannot filter by tax returns and P&Ls. If you watch the video from the other day, and I'll put it in one of the drop downs. I did an exercise where I pulled up listings in each market, and then I said, okay, how many have tax returns? And in Tampa, it was less than in restaurants in Tampa, it was less than 10%. It's generally 20% of listings on the market have tax returns. Yes, it's a problem. Yes, sellers should. I get it, but the reality is supply and demand dictates the marketplace. Whether the sellers are prepared or not prepared doesn't really matter. I don't care what they should do or shouldn't do. I mean, I do, but I'm not here to win that fight. That's the accountant's job and their financial planners and exit planners to have had those conversations long before they get to me. Anyways, let's just go into an exercise, and we're going to specifically focus on one in particular that I'm dealing with. It's getting a lot of activity, which is what genesis this entire conversation. We're going to look at a maid service. We're going to look at maid services for sale, and we're going to look at what they sell for. And I'm going to take you through cradle to grave, um, the deltas on valuation and the multiples, and I think you'll be shocked. So this is local areas. Um, Geography matters. You cannot look at a business in Orlando and then compare it to a business in Sarasota. Um, it just doesn't work. There are different market dynamics, believe it or not. We could do another video on pool companies, and I'll demonstrate that really, really well. It even changes by county, how you value things in that space over there. Anyways, let's look at maid services or cleaning. So I ran just cleaning. You can see it pulled up everything in that space, maid and janitorial, grout, pressure washing, etc. So we want to filter it a little bit more. So let's go ahead and do that. Again, we're back at cleaning. We're just going to do janitorial maid because the model's semi-correct, right? It's labor and a billable service. So we're going to run that query. It drops down. Um, so that's all the businesses that are presently on the market that are made. Now, you could go and calculate the multiples here, but you'll see there's a wide disparity of revenue. Um, and I don't think that's appropriate. So like this guy's at a 2.1, he's only making 36,000. The math doesn't work. So multiples are not static by industry. Multiples flow based upon cash flow, based upon market demand, based upon desirability. There's a lot of reasons why multiples may be higher. If this was a pool company, that multiple actually might work. In a maid service, it's probably not because in order to make that cash flow, that owner is probably cleaning, so it's less desirable. I hope you understand that. So let's go back and filter this up just a wee bit more. We're going to go down to the second filter, tax returns. And we lost one of the listings. So these are what's on the market. This is the listing I want you to pay attention to. And let's just check out the multiples. So you can see this multiple is the highest, but it's also got the highest cash flow. This multiple um, is the lowest. So this guy's at 2.1, this guy's at 2.2, and yet the cash flows are wildly different. We don't look at revenue, but you will see that in particularly in service businesses, there is some consistency to list price to sales. But valuing on revenue is a dicey measure because there's a lot of dynamics that can make that number go up and down. Educated buyers will sometimes do that in the service sector because they can just swallow the business into an existing model and they'll accumulate margin that way. But you'll see, we can actually look at the averages and see what the cash flow is. So remember this one, 2.2 multiple. Now we're going to back and look at sold statistics for the same category, same area, right? So sold statistics, Florida. Let's go down to Hillsborough. Mm, Pasco, Pinellas, right? And I believe Manatee is in there. And we're going to go to clean again, janitorial and maid. You're going to see the multiples are going to be about 1.5, right? Now that's macro level, right? And lo and behold, that's what we got, 1.5. Now, what happens when we filter by revenue? So it's an apple and apple because we're looking at that one listing, remember? And the revenue on that business is about $450,000. So why the spread? Because labor has changed over the last 5 years and cost of fuel has changed. So I want a wider spread to get a similar cash flow. And we want to see a cash flow of 130. Remember the cash flow on the other one for a working owner was 150. But let's just do that and see what it spits out for a multiple. You see the data sample gets smaller. Let's go back and add tax returns only. See, oh, only one. Let's see what he sold for. 2.2. What was the multiple on the business subject? 2.2. When we go back and take out the tax return, which means that there weren't any taxes on the listing, um, you can see the multiples hold. 2.0, 2.23. So the business that's currently on the market is priced appropriately based upon the sold comps, apple to apple comparison. Now you can get even more granular. You can look at each listing, try and figure out was it a franchise, was it not a franchise? Cleaning company, probably buying from essentially Pasco. So that's janitorial. Let's see if any of the maid services were apple to apple. Let's look at this one. It was a franchise. Some people like them, some people don't. I can tell you this was probably a visa. I know this broker, so I can figure it was probably an immigration visa, which forces multiples to go up. So what am I telling you? Um, what I'm telling you is that the brokers more often than not, if they're skilled, know what the comps are. We can share the comps. You as a buyer, as a seller, should ask your broker for the comps. Multiples are not static by industry. I hear that all the time. What do you sell a pool company for? What do you sell a restaurant for? There are rules of thumb, but as you can see, the quality and the quantity of the earnings impacts the ability of the business to get financing and the desire of the buyer to get into it. First-time buyers are very nervous about buying businesses that don't have tax returns. So to the sellers, um, I can't emphasize enough the importance that you have clean books and records, that you understand how to do legitimate tax mitigation, that your accountant work with you to do that. And if they do not, or do not want to, or are not able to, then frankly, you need a new accountant. Um, I can do these exercises on any category, on any listing, and show you, what the real number is. Because every buyer doesn't want to overpay. That's a normal thing. And sellers want to maximize. But the sellers have to do the things to get the maximization. And there's a payoff there. If you have legitimate tax returns and you run your books clean and you do the things to mitigate your taxes legitimately, then you'll get a higher sales price. If you do not, you'll get a lower sales price. It's just that simple. If you have any questions, give me a call, 321-287-0349, or you can reach me at mike@tworld.com.